You are listening to chartingwealth.com for Friday the 26th of May, 2017. We see that stocks are up for the day, gold is down, bonds are up. Let's jump right into this market and stay tuned to the very end because we're going to talk about the market adage, price precedes news. And we're going to show you again that quarterly chart on the S&P 500. And we're going to speak particularly about that adage and what price preceding news told us. Now let's jump right in to the S&P 500. It is up for the week so far, still has not crossed over on the PPO, the price percent oscillator. Derivative oscillator may be getting close to crossing over. Remember, typically the Friday before Memorial Day is a lackluster day. There's not a lot of trading usually. People have headed off on vacation on Wednesday or Thursday, and they've left the second tier team in charge with instructions, don't screw anything up. So let's look at where we are so far over the course of the week. Where has the market leveled out? Right about where it had topped out in the 3 prior weeks. So again, the market is slipping sideways, again tending up, but not enough to pull over our most important indicator, and that is the price percent oscillator. Now, that may happen. We'll continue to watch. Now, remember, we're still confirmed negative on the weekly indicator, the weekly PPO, and we had our weekly vertical crossover going down all the way back on the 31st of March. Now, when we go and look at our 2-day chart, let's zoom into that. It, of course, has crossed over. That has closed, and it is confirmed at this point. We talked about that possibly happening yesterday. Beautiful thing about our charts is it's so easy to change it. That's what I love so much about TC2000 and freestockcharts.com. It's just the best piece of gear out there. So now we have a confirmed crossover going up on the 2-day chart. So we're waiting to see if indeed when the weekly crosses over going up. Now it hasn't happened yet, so we don't have a trade. We could just as easily see the 2-day chart rotate back over going down, but we will continue to monitor that. So we have no trade on the S&P 500 at this time. Let's take a look at the Qs where we do have a trade. The Qs, of course, crossed over on that weekly chart going up back on the week ending the 28th of April. That weekly vertical crossover occurred. It was preceded by the 2-day vertical crossover that prior Thursday. We, of course, jumped in that Monday somewhere around about, as I recall, it was somewhere around 132. Yeah, 130, well, yeah, somewhere in the neighborhood of 134, I guess. And we are up to 140 at this point. We did have that knocking on the door crossover. Looked like it was going to cross over on that 2-day chart going down. Then, of course, it bounced right off that. We still see, however, concerning the derivative oscillator continues to go down. This is very, very bizarre on that 2-day chart. Bounced off the signal line and then moved up. We're above the weekly trend line and the 2-day trend line. Price movement is, but it is concerning that the derivative oscillator continues to move down. So again, this market is being held up by what? Well, printing a lot of money, a lot of enthusiasm maybe, but it is interesting, still going up. So again, that weekly vertical crossover is an amazing thing, and that 2-day, when it doesn't cross over, and it darn sure looked like it when we saw the market have those trembles back on Wednesday the 17th, and of course we had followed by 2 more days through Friday of last week of potential down movement and then rebounded up. So again, that is where we are, my friends. We'll continue to watch with speculation what the heck's going on the Qs, but it does continue to go up. And also important, Have you guys heard FANG? What is FANG? Well, of course, that is Facebook, Apple, Amazon, Netflix, and Google, Netflix being the smallest little partner there. But the FANG stocks are what is really making the NASDAQ 100 and the S&P go up, up, up. Now, again, primarily the S&P. But again, technology stocks in general is what, of course, the NASDAQ 100 is, and as we continue to see the NASDAQ 100 boom and the S&P 500 boom, we need to realize that so much of that, all of those are S&P 500 stocks also. And what does that do? Well, of course, as they continue to boom, as they're talked about in the press and people just dump money in them, the market just continues to move up. And of course, we see technology stocks moving up too. So just continue to watch with bated breath and make money on it when it works. And when it doesn't work and we see the trend turn over and go down, get out, take that money, and again, own our virtual trades and count yourself an intelligent person who was able to trend follow. Let's keep pushing through these charts. We're going back to TLT. It was up for the day just barely 0.03%. We're still in a confirmed up move on that weekly chart. And of course, we had recently, and we'll go to that 2-day chart and take a look at it. We had recently back on the 19th, we had the crossover going up. But what's happened since then? Well, the market's really slipped sideways on bonds. And again, we've had some up movement, but it's been weak. Now, look at what's happening. We've had the rollback underway on the 4-hour chart, but it has not crossed over yet for us to jump in. So continue to watch. Derivative oscillator is still quite negative, and we're just sliding sideways on the price percent oscillator. So until that crosses over going up, you don't have a safe entry point. And it may not happen, but if it does, everything else is set up to get into that move and practice that trade. You have the 2-day chart and you have the weekly chart from way back in February when it crossed over going up. And it's treated us well, though, as we've gotten in and gotten out based upon when that 2-day chart rotated over on us. So continue to watch and pay attention to what's going on. Okay, lastly, let's go to gold. Gold was down for the day. We're going to go to that weekly chart first. Of course, gold just won't cross over going down on that weekly chart. It's looked like for a while that it would. In fact, all the way back on the week ending the 12th, it looked like it would. Then again on the 19th, those 2 weeks ending, and it hasn't. It's run parallel and not willing to cross that signal line. Derivative oscillators continue to gain energy. So we see now 2 green up candles, a spinning top on the weekly chart ending back on the 19th of May. And of course, the weekly chart that we have not ended yet for this week is a green up candle. Now, as we zoom in, so we know that we are confirmed in an up move on the weekly chart. Check out the 2-day chart. Still in a confirmed down move and hasn't crossed over. We've seen the derivative oscillator crossover, but we don't have a crossover yet on the 2-day trend as far as the price percent oscillator goes. So we'll continue to watch and see what goes on there, but let's just for fun take a look at our 4-hour chart. It's not crossed over yet. It's been sliding sideways also, just like we've seen in the bigger charts. Of course, the bigger charts are made up of the smaller charts, and we've seen that sideways slide since about the 17th of May, as things have just not been willing to go up. So again, we're waiting to see, will this bounce off and move up on the 4-hour chart or cross over and go down? We'll continue to watch. Remember, one thing about this 4-hour chart is it is a potential trading chart because it works. Again, regardless of what's going on the bigger charts, this 4-hour chart is crazy accurate. Just crazy accurate. So again, if something works, my friends, you use it. Now, lastly, let's talk about price preceding news, and that's going to require us to go back to our S&P 500 chart and going to require us to go all the way out to the quarterly. We talked about this on yesterday's podcast about how if you did nothing, if you had a gigantic pot of money and you wanted to figure out what to do with it in the stock market, well, if you just use this quarterly chart and you just jumped in when it crossed over and closed, in other words, you looked at this chart once every quarter, you would have done about as well as could have been expected. You would have gotten in somewhere around early 2005 and ridden the market up. You would have gotten out about the time the market started to move over in mid-2008. You would have let the market crash and then jumped back in when it started moving up sometime around early 2010. And my friends, you would have ridden it all the way until, and this is what's weird, you'd have gotten out somewhere around $199 to $212 a share. And what would have happened? Well, it had not happened 20 years prior. We can go back just about that far. Whenever a crossover occurred, it lasted a long time, but it did not in 2016. Now, you've heard before, if you haven't heard it, we said it, price precedes news. It is an old market adage, which means when you see the price doing something, you'll find out later why. And it's interesting what happened. Now, it looked like that Hillary Clinton was going to be president. People were putting in more of the same, and somehow, and the market started to rotate over. In fact, there was enough downward pressure on the market coming out of 2015 into 2016 that we had a rotation over on the price percent oscillator. But look what happened throughout the course of 2016 as the Trump revolution started to gain speed. The market continued to move up, and of course, when Trump got elected, the market boomed up over the last many months since the beginning of this current year. And we had something that had not happened in all those prior years, those 2 decades that we can go back and trace, is the market reversed itself almost immediately over the course of just a few months. It turned right around, well, over the course of 12 months, but it slid sideways for quite a while, or at least our price percent oscillator did, and then oscillated back up again. Same thing happened with the derivative oscillator. It switched over going down in June of 2016 and September, those 2 quarters, and then popped back over in December and zoomed up in March, and so far since then. Very, very fascinating, very, very interesting as we continue to watch what is going on in this market. Price preceded news. The price told us what the news was going to be. So again, we always watch the charts. If you pay attention to the news, you're getting it wrong. News doesn't precede price. Price precedes news. Somehow the market knows before the news comes out. You've heard that adage also. You buy on the rumor, you sell on the news. So again, price precedes news. Keep that in mind all the time. That again should cause you more than ever to focus on these charts. If you're sitting around listening to CNBC, Bloomberg, all this other stuff and spending your time doing that instead of watching these charts, I would argue that you're wasting a lot of your time and your energy. You're going to find things out after the price has moved. The way you see what's going to happen is you learn, you follow, and you chart the market. That's how you do it. Charting is the key. Thank you so much, my friends. We always love to hear from you. Please let us hear from you. CW@chartingwealth.com. I have questions from you guys all the time about what kind of charts do we use? How do I learn what you're doing? How can I follow this and learn from you the best way? You go to chartingwealth.com. You put in your first name, your email address. We will then send you every day the recordings that we do, all the training, all the daily recordings, and you'll get with that how to read a stock chart video, which will teach you the basics of what it is we do and why. It's only 15 minutes long. It'll give you everything you need to know what it is we do to start off with. We'll also send you a link to freestockcharts.com to the layout that we use there. Again, it's free. It doesn't cost you anything. Nothing that we're offering you costs you anything. We'll also give you PDFs for our trade worksheet where you keep up with all your practice trades. Remember, we're not a stock calling service. We want you to practice with us until you get good, and then you can make up your own mind how to spend your own money. We also have the daily market worksheets available, another PDF, and the weekly market worksheet that you fill out over the weekend preparing for Monday. Folks, that's what we are all about. We appreciate you. We love to hear from you. Follow us on Facebook, Twitter, Instagram, YouTube. Please help us to get up to 3,000 subscribers on YouTube. Go there. Charting Wealth is where you can find us. And also on iTunes, you can subscribe to us there. And please give us a 5-star rating. Say something nice about us. You guys have made us as high in the world as like number 4 or 5 in stock trading, stock market, and some other designations as far as podcasts go. And we really appreciate that. We work hard to earn your trust and confidence. God bless. Take care from chartingwealth.com.